across to Upasna Bhardwaj, an economist at Kotak. Upasna, thank you so much for taking out time for us. Could you just first start by the borrowing number which has come in this morning, which is way lower than what was planned earlier or what the markets were factoring in earlier? Do you think it came in as a big surprise for the yields or for the Mint Street?
Yes, obviously, I mean, that was reflected in the bond markets today. The reaction function that was witnessed in the morning was obviously suggestive of the kind of surprise that was there. But obviously, if you look at the entire scheme of things, here, just 3 weeks back, 50,000 on the dated side, 50,000 crore on the dated side, plus 23,000 crore extra on the short-term dated, short-term borrowing. So overall, 73,000 crore of extra borrowings was announced. And now, within 3 weeks, it's very difficult to fathom exactly what has changed for the government to be so comfortable in terms of withdrawing the 30,000 crore of extra borrowing that was announced earlier. So here, of course, there are a lot of elements of uncertainty. One was, of course, the divestment target, which was any case having, which was already expected to have increased from a 72,500 to a 1 lakh crore. So that kind of a positive surprise was already expected. But leaving that aside, there has been a lot of uncertainty on the GST collections. There is no clarity yet. We are not seeing any changes there. There are no other sources of financing yet, which is suggesting a shift in the trend. So, within 3 weeks, a turnaround, we yet have to see what are the factors which has led government to become comfortable enough to have reduced the borrowing at this point in time. So definitely a lot of uncertainty, but having said that, yes, near-term relief for the bond markets, and more so, I think it does provide a little bit of forward guidance as to what the next year's readings would be, and that is where probably we'll have to be on a watch out to see exactly what is the final fiscal deficit number which will be delivered on 1st of February for this year, where we close, and hence what is the kind of consolidation we can expect next year.
Right, Upasna, I just wanted to get a sense that going into the budget, now that GST has come out earlier, people used to look for indirect taxes, the changes over there, what's happening in. But this time around, the focus will purely be on what's the fiscal deficit target for next year, what's the likely overshooting this year, and essentially out of which how much is additional borrowing. That's essentially what will be the focus point.
No, I think here there are two parts of the announcements that will be there on 1st of February. One is, of course, like you mentioned, what will be the fiscal deficit for this year and what will be the number for next year. That is one part, of course. Second is the credibility of that number. So is the quality of that expenditure that is going to be announced, is that going to be maintained? Is the quality of the fiscal, overall fiscal budget? Of course, we know that the focus for the next year is expected to be on a rural side, the agricultural sector, and probably infrastructure. So these are the three key segments that we would be watching out for. How much is the announcement there, and what are they offsetting it from the revenue generation side? Of course, we do expect some kind of positive paybacks coming from, sorting out the GST issues in this year into next year. So next year onwards, probably the tax compliance in the indirect tax collections is going to improve. That should provide hope for the government to begin with a robust revenue growth next year on the indirect tax collections. And apart from that, of course, we'll have to see how the non-tax revenue collections is going. So I think all the internals will be very, very crucial, along with the overall quality of spending that we talk about. So it's not just about the headline number, but also the quality of the numbers that we would be reading into to have a sense on the credibility of achieving those targets for next year as well.
Right, and Upasna, hi, Avan joining in. While you spoke about the importance of, that critical number, give us a sense as to how critical it is in terms of the overall GST tax projections and collections. How important will it be to monitor that number, and how much of an impact as well is that going to have?
Yeah, here I think what's happening is we all already have talked enough about the teething issues with GST, a lot of non-compliance that is happening, and I think with the implementation of the e-way bill, the GST collections over a period of time in the next 3 to 4 months probably, we will start seeing definitely a positive trend in that. But yeah, I think in the near term, the previous two readings have been significantly low. So the run rate for the GST collections has come down significantly, and if that was to continue into the next 2 to 3 months, it would be very difficult for the government to have achieved their indirect tax collection numbers. Having said that, the direct tax collections run rate seems to be good at this point in time. 67% of the budgeted revenues have already been achieved. So some kind of an offset can be seen from that point of view. And of course, if the divestment targets are being overshot, then somewhere there is a buffer, and hence we do expect that the fiscal deficit for this year probably will be closer to 3.4% of GDP, and then moving on to next year, a 3.2%, that looks more feasible, as against, of course, an earlier set target of 3% for FY19. So at this point in time, we do not really see FY19 target set at 3% because of the challenges that exist, both on the revenue side as well as expenditure, especially given that it's an election year next year. So we are sticking to a 3.2% fiscal deficit target for next year.
Okay, and what would be your outlook in terms of how crude oil prices have shaped up and what kind of an impact that is going to have on the overall fisc and GDP? At what levels of oil do you think India macros will really tend to react adversely or deteriorate?
Firstly, on the crude oil trajectory, what we expect is that after the winters, we expect a correction in the crude oil. I think at this point in time, the domestic demand across the West has increased significantly given the extreme winter conditions there, and that has led to a significant drop down of the inventory levels. But as we go into, say, a quarter from now or so, we expect some kind of a reversal in the trend, and so crude should probably stabilize somewhere around an average of 65 as against a current range of 69 to 71 that we are seeing. So that is our baseline assumption, 65, which should probably, obviously it does have a bearing because vis-a-vis last year, we will be seeing almost on an average $10 move, which typically tends to have almost a 7-8 basis of an impact on fiscal. And of course, every $10 move tends to have about 60-65 basis of an impact on the CPI inflation. So, it does have both fiscal and monetary policy implications. And at the same time, of course, we've already seen the recent trade deficit numbers. So the impact of the oil imports has already started getting reflected in our balance of payment numbers. So clearly, if we were to see crude oil prices trending higher from current levels and probably sustaining above 70, then the macros are expected to deteriorate further. But if the correction was to happen towards 65 levels, then we do not see really a risk at this point in time on the macros.
Right, Upasna, thank you so much for taking out time for us. Always good to get perspective from you. That was, of course, Upasna. Upasna, and once the borrowing number for next year fiscal deficit is out, we would like to again get your view as to what's the credibility of that number or what sort of projections, and according to you, are most of those projections realistic or not? So that'll be an important thing to watch out on. 1st of Feb is when you get that.